Good morning, everyone. I think we can start now. It's 9 o'clock. So welcome to the webinar about the economic employer concept in Sweden. My name is Kristi Kivi-Frimpong, and I am Senior Trade Advisor at Enterprise Estonia in Sweden. We have a very interesting program prepared for you together with Deloitte in Sweden. So I just will go very shortly and present this to you. So first we will hear presentations from Deloitte, and then at the end of presentations we will have opportunity to ask questions. So please write your questions in the chat, and then we just take them at the end. But now I would like to welcome our speakers today. We have Joel Salamon, who is the manager at Deloitte, and then Matto Saarik, who is director at Deloitte. You are welcome. All right. I think your microphones are off. So just
there. Now.
Perfect. You're welcome to the webinar.
Thank you so much. Thank you. It's a pleasure to be here to speak to everyone who is in this webinar. And I think if it's okay, I will share my screen since I have a presentation.
Yes, and I will stop sharing. I think I did already.
Here, let's see. Oh, okay. Okay, can you see the presentation?
Yes.
Great. So, welcome everyone. To introduce shortly myself, my name and my colleague here. My name is Joel Salamon, and I am working at Deloitte in Sweden. I am a manager, and I have been working for the past 5 years in Deloitte in our global employer services. And that is basically my specialty is individual taxation and employer taxation. So basically what the employer has their tax obligation in Sweden when it comes to their employees. I also specialize in payroll and international payroll. Matto, would you like to introduce yourself?
Yes, thanks, Joel, and good morning, everyone. My name is Matto Saarik. I work with corporate income tax, and I'm based at our Malmö office, where I also lead our corporate income tax team. I do have a history in the same area as Joel. I have previously worked with mobility services and cross-border situations in relation to employer and employees. So the topic that we're going to discuss today is, for me personally, specifically interesting because it combines two tax areas, and both of them are important to have in mind when going through the impacts and implications for companies. So, should we switch to the next picture? Yes. So what are we going to talk about today? Well, you have all heard, I guess, that there is a law change in Sweden now as from 1st of January 2021. And a lot of the discussion concerning the law change is, or the main topic is, there is a change from formal to economic employer concept, and that is correct, and that is also the primary discussion from the legislators' side. What is important, however, is to keep in mind that it is not only one law change. There are several law changes, and each one of them could have an impact on your business and the activities that you carry out in Sweden. And the purpose of our session today is to sort of highlight each one of these changes for you to get an understanding of the different aspects And what we are going to talk about today, and the first point is the shift from formal employer concept to economic employer concept. This is something that you will walk you through. And what you should have in mind here is that this change impacts the employee's tax situation, the employee's tax liability. The second point is the change of foreign employers' payroll obligations. This is, of course, due to the shift to economic employer, but there are also some aspects and wordings in this change that could have an impact on other situations. You will also describe this further. The third change that we want to highlight is basically an introduction of a withholding obligation when a Swedish company pays a foreign service provider for services that company has provided in Sweden, unless there are certain tax registrations in place in Sweden. And I will also show some examples and describe what this really means. And finally, the last point that we would like to highlight is that there is a new annual reporting obligation introduced also for foreign companies in certain situations. So as you can see, there are it is not only a shift from formal to economic employer. There are other aspects that needs to be considered, and hopefully after this session today you will get a better understanding and will be able to take the next steps to identify what you need to do within your business to comply with these new regulations. And we do not have much time, unfortunately. We only have a month and a half almost before the new legislation enters into force. So Joel, over to you and the shift to economic employer.
Thank you, Mato. So let's talk for now then about economic employer and the formal employer. So in this slide, you can see that there are 3 criteria. These criteria are stated in the Swedish internal legislation. And if you tick all of these boxes, as you have before in Swedish legislation, you will not be taxed in Sweden. So basically, this is a history. So if you had an employee that was not in Sweden for more than 183 days, the remunerations paid was not borne by a permanent establishment in Sweden, and the remuneration was paid by an employer who was not a resident in Sweden. If all of these boxes were ticked, you would not have an employee that was taxed in Sweden. And please note again that this is internal legislation for non-residents. And this is what we call in Sweden SINK. And the SINK legislation states that if you are taxed with a 25% tax rate. So in our domestic legislation, it also says that an employer is the one who is paying for the work. So this is what will change. So with this new exception, we are then adding a third party to the mix. So we still have a formal employer concept in Sweden in the ways that there is an employer who pays for the remuneration, and it pays the employee. So you have the formal employer who pays the remuneration and holds a contract to the employee. The employee, the second party. But now we are introducing this exception, which is the economic employer. So the economic employer is an employer who has the control and the direction of the work. So basically an employee goes to Sweden and performs work in Sweden on behalf of this economic employer, but does not get paid for it. then you will have an economic employer in Sweden, and then you will be taxed on your working days in Sweden. So how do we know that you have an economic employer in Sweden? Well, these are the factors that you have to look at. And it is important to say and to know that you do not, if you check one of these boxes, you do not know if you have an economic employer or only a formal employer, but you have to make a full analysis to see, okay, which one of these factors do my employee tick, and in that case, do they have a formal employer or an economic employer? So a lot of times in an international aspect, we look a lot on the charge of remunerations. That's why we have highlighted here. But please note that in the Swedish legislation, we have also, it is stated that this is not only the only factor that you should look at. So if you have an employee for 183 days during a 12-month period, do you have to look if you have an economic employer in Sweden or not per automatic? No. There is actually exceptions to these rules. So if you have an employee who is in Sweden for 15 consecutive work days in a row, so 5 days the weekend they're off, 5 days the weekend they're off, and 5 days the weekend they're off, and then they go back to Estonia, for instance, then you do not have to look if there is an economic employer. So this is one of the exceptions. The second exception is that if your employee has 45 work days during a calendar year. And please note that there is a difference between 15 consecutive days in a row and 45 calendar years. So, for instance, if an employee works 15 or 16 consecutive days from in the end of December over to the new year, then you might have to do an economic employer review. However, if they work 45 days and the 45th day is almost the last day of December, and then they start to work again in January, then you have to do a new calculation for the new year. So this is a little bit of an example that I have. So here, the first, we have 16 days in a row. So because there is a 16-day in a row work days, you have to do the economic employer review. So you have to see, does my employee have an economic employer? However, then the employee goes back home and then works 9 days in a row. It goes back home 9 days, as you can see in the example. Because of that, these 9 days are less than 15 consecutive days in a row and less than 45 days in a row, you do not actually have to make an economic employer review of these days. So, but you have to make an economic employer review of the first 16 days. So as you can see, these days are quite confusing and quite complex, but not to worry. There will most likely be a lot of clarifying in the future. However, as you can see, that you should really look into how does my employee travel to Sweden.
Joel, and one question there. When you say break, it actually means it doesn't mean break like in no work. It means that you have to work abroad of Sweden, correct?
Correct. So you have to have work days abroad from Sweden. That is correct. You cannot just go on holiday and then continue to work in Sweden right after. So let's then take a little example.
Yes, and I would guess that this is a typical situation in the construction industry. We have a contractor in Sweden, a Swedish company, who then hires or subcontracts a foreign company, in this case, a subcontractor from Estonia. And the Estonian company sends and hire out 2 employees to the Swedish company to work in Sweden under the Swedish company's control and guidance. And these employees, in this example, will stay in Sweden for 5 months. So under these new rules, how should we reason? What will the outcome be?
So I would say that we first then look at what kind of work did they do. And in this example, these construction workers are doing a core services, so to say. The contractor in Sweden have the responsibility and the risk, and also gains the favor and the profit. They have control, and the subcontractor invoices everything to the contractor in Sweden. Since we tick all of these boxes, I would say that there is an economic employer for these construction workers in Sweden. So they will then be taxable under the non-resident law in Sweden, SINK, which means that they will be taxed on 25% on their Swedish work days. So it's very important to say that they will not be taxed on their total income, but on their Swedish work days. So you will have to make an allocation to see that which days will they be taxed on. So let's have a little other example.
Yes, and in this example, it's not a clear case of hire out labor. In this case, we have a multinational company group with a centralized function abroad. In this case, a global mobility function in one of the foreign companies. And the employees in this mobility function travels to other countries in their roles and support the local subsidiaries through physical presence, through meetings, and maybe leading work in Sweden. And what should be mentioned here is also that the invoice amount in this case is probably calculated based on a number of factors, including how many employees each company abroad has. So it's not a direct invoice of salary costs. The basis for the invoicing is based on other factors. So will this situation differ from the previous one, Joel?
Well, we would say yes, because this work, when an employee comes to the Swedish company, it's not part of the core services in the Swedish for the Swedish company. It's for the group per se. Also, as Matto said, since the invoicing is not actually for the salary cost, but as a normal fee that is invoiced to all companies, we don't see this also as ticking the box for the economic employer. And also, as I say, the work is performed for the group, not the company. And also, we have to look at, is there work that exceeds 45 days or 15 days in a row? So again, we always go back to the exceptions to see, do we even need to do this evaluation? But from this point, we would say that there would not likely be an economic employer in Sweden.
And
so yes?
Sorry, does this mean, just to go back to the previous slide, does this mean the 15 and 45 days threshold? If we take a look at the first example, if the employees would have been in Sweden less than 15 work days in a row and not more than 45 days in a calendar year, we would not need to make the economic employer evaluation, basically.
Correct. So if you always have employees that are less than 15 days in a row or less than 45 days per calendar year, you do not have to make the assessment, and the employee will not be taxed in Sweden. So this is the schematics basically that we have followed in these examples that you should always look at when you send employees to Sweden. So first is if an employee will be less than 183 days. Then is there an exception to the rules? If not, is there an economic employer? If not, no taxes in Sweden. If, then your employees will have a tax liability in Sweden. So to summarize this section, we would say, know your employees and know their work. What will they do when they are going to Sweden? Know when your employees are going to Sweden. How long will they be there? What will they do when they come back? Will they have a break and then go straight back, or will they work again? And also, if you don't have it, maybe get a policy in place for having employees in Sweden, or if you have a policy in place, is this applicable to the new taxes for the employees, since there might be additional taxes for the employees to pay, and maybe you need to have a policy in place how to deal with that. I'm now going to go to the reporting obligations. So the second and third point, Matu will actually talk about, but I will talk about the payroll withholding and reporting obligation. This will affect all employers but might also affect the employees depending on how a setup is made. But with the new legislation, it states that if you have an employee in Sweden that are taxable for their work days, the employer have an obligation to report and withhold taxes. So the tax rate that the employer will have to withhold is 30% unless you have a non-resident sync decision, and then you will have to withhold 25% in tax. So basically this obligation will make so that you as a foreign employer will have to register yourself to the Swedish tax agency as an employer and withhold on a monthly basis the taxes that relates to Swedish work days. So again, if you do not have to make the assessment because of the 15 to 45 day rules, you do not have to do a withholding. But this is contingent on your employees being Swedish non-residents. If you have Swedish if you have employees that are Swedish residents, so they are here over 183 days, then we go from the economic employer concept and we have to look into other Swedish regulations, but also the double tax treaty between Sweden and Estonia. And then I would say that most likely they will be have to be taxed on their Swedish work days as Swedish residents. And again, that this new legislation also states that if you have residents working in Sweden, you still will have a reporting and withholding obligation. And because they are residents and not non-residents, the sync decision cannot apply, which means that you as an employer will have to report and withhold 30% on the salary paid to your employees working in Sweden during the time that they are considered residents. And this goes for, well, everyone, if you do not get a tax adjustment decision stating that you should not have to withhold this income. So if also this is for commuters, if your commuters are residents in Sweden, then you will have to withhold taxes on each day that they have Swedish work days. This was a little bit about...
Yes, so sorry, Joel, and this is a change from today, right? Because a foreign employer without a permanent establishment in Sweden, he has no withholding obligations or reporting obligations under current rules of today.
Correct. So the legislation now is that you do not have to, or legislation now actually states that you should report income, but there is no penalties or any way that states that, or that you there are no basically penalties and nothing that says that you must, but you should still now register and report, but nothing happens if you don't. However, with the new legislation, if you do not report and withhold, there will be penalties on the amount that you should withhold. And if that amount actually grows into a substantial amount, then we're actually going into the Swedish tax evasion legislation, and even the signatory for the foreign company can be persecuted in Sweden for tax evasion here. So it's quite extensive legislation, and well, yeah. So that is it regarding the obligation to withhold Swedish taxes. Mato, I leave it over to you now regarding the third legislation.
Thank you, Joel. And what we have discussed now is basically the relationship between employer and employee versus tax agency, sort of. And what you have seen is that change from formal to economic employer concept, that the reporting obligation for that lies with the foreign company. They have the payroll reporting obligation, and the individual or employee becomes taxable in those, if the employee becomes taxable in those cases. So what we're going to discuss under this point now is in relation between businesses. So it's a business-to-business withholding obligation that is introduced. And under current rules, and to give you some background, under current rules, a Swedish payer of a foreign invoice has no withholding obligation, even if the foreign company has provided services in Sweden, unless the foreign company has a permanent establishment in Sweden. And then the Swedish company must withhold taxes. So this is the main rule under current legislation. But what is proposed now, or actually what will enter into force as from 1st of January, is that if a Swedish company makes a payment to a foreign company for services that have been carried out in Sweden, then the Swedish company must withhold 30% tax from that payment. And the only exception to that, or exemption to that, is if the foreign company is registered for F-tax in Sweden or has a decision of relief from withholding from the Swedish tax agency. And we will shortly have a look at an example also illustrating this. But this raises, of course, quite a lot of questions. And the first one is, what do we mean by payment for work? Well, what we say here, or what the legislators say here, is that payment for products is not covered under this obligation. And basically everything else that is not a product is considered as work. So services are, for example, normally consisting of work hours, and that would be falling under this obligation if it is considered as carried out in Sweden. And to give you an example, if a Swedish company purchases a software program from a foreign company, you would normally consider that as a purchase of a product, even though the software or development of software is including work hours. But from the buyer's perspective, it would be considered as a purchase of a product. But if the Swedish company hires a software programmer to come to work in Sweden, then that would be considered as a service delivered here, and would fall under this obligation. The second point here is that to get under this obligation, the work must be carried out in Sweden. And what we mean here is that there must be a physical presence in Sweden. So if a Swedish company hires a foreign company just to provide services from abroad, exclusively only from abroad, then it would fall outside of this withholding obligation. So what does registration for F-tax mean then? Well, the registration or actually F-tax is, when obtaining an F-tax certificate, you're basically approved by the Swedish tax authority that you are capable under the law of handling and being responsible for your own tax payments. And thereby the payer of your income is not obliged to withhold preliminary taxes. This is the main rule that Swedish company works under. Most Swedish companies are also registered for F-tax. So this obligation in relation to Swedish companies does rarely come into force or is rarely relevant. But what's new then is that it will be relevant in relation to foreign companies, because the concept of F-tax registration is not that common. The registration itself is not very complicated, but there are some formal procedures that must be considered, and amongst others, some certificates from abroad, from tax authorities abroad, that must be provided. And in some cases, it's not that easy to obtain all of these certificates. Registration for F-tax, that does not mean that the holder of the registration or the tax certificate is actually taxable in Sweden. The rules that determines the foreign company's taxability in Sweden are still unchanged. They remain unchanged, and the foreign company must still be considered to have a permanent establishment in Sweden to actually become taxable. So there is no changes in that regard. The second exemption here, what do we mean by saying that a possibility is to have a decision of relief from withholding? This is something that we normally have when it comes to mobility, for example, employees working abroad. We will normally use this possibility to exempt them from Swedish preliminary payroll taxes in case they are exempted under tax treaty, for example. But when it comes to companies, we have rarely used this possibility, and we do not really know how the tax agency will apply this possibility. So we are hoping to get some clearance and guidance, but basically what you would need to do to obtain such a decision is you have to fight for it, of course, with the tax authorities, and you have to describe what kind of activities that you are doing in Sweden. And then you have to include some kind of claim saying that, yeah, we are a resident abroad, we have a tax certificate from abroad, and should be exempt for Swedish corporate income tax either under tax treaty or under Swedish domestic law. And I would say that this change is something that could cause some practical problems, both for Swedish companies, because they are actually having the obligation to withhold taxes lies with them, but they should withhold money that actually belongs to the foreign service provider. So this is something that could change some or cause some problems. And we have some examples here just to illustrate what we actually mean by this.
Yes, so this is basically the same example that we had before. However, there is actually one exception, and that is, as we can see, that the 5 months that the construction workers are in Sweden has been taken away. Does this change anything, Matu, depending on how long an employee is in Sweden doing work for a Swedish contractor?
No, that does not change, because the only exception from this withholding obligation is if the foreign company has an F-tax or a decision on relief from withholding. There are no exemptions with regards to days threshold or any exemptions with regards to amounts payable. I think there is a limit of, I think it is 1,000 Swedish crowns, which is a general exemption. So it won't be relevant in these cases. And what we have in this case, it's a typical example that will be covered by this new withholding obligation. We have a foreign company that provides services in Sweden through working hours here, and then invoices the Swedish company for the services. The services are definitely carried out in Sweden. So when the Swedish contractor makes the payment to the Estonian company, they have a 30% withholding obligation, unless they can confirm that the Estonian company is registered for F-tax or has obtained this decision for relief from withholding. And if neither of these two are in place, then the Swedish company will withhold 30% income taxes, and they will report it to the Swedish tax authorities. And the 30% tax will then be hopefully credited to the foreign company in connection with the tax assessment, which is then due the year following the year when the payment or withholding has been done. So after either the Estonian company has filed a zero corporate income tax return, or the Swedish tax authorities has actually made an automatic tax assessment, the withheld money will be refunded. I guess that most companies would like to avoid this situation because they're not really keen on having 30% tax being paid to the tax authorities and having to wait for that. So in this case, the Estonian subcontractor must definitely consider to register in Sweden for the F-tax. What should also be mentioned is that when you register for F-tax in Sweden, you would automatically have an obligation to file a preliminary corporate income tax return. But when filing that tax return, you would also need to declare if you're taxable in Sweden or not, and on what basis. So basically what you have to do is explain your activities here.
Great. So maybe we should take an example like the one we had before, also with the company group, and if you could go into if this triggers withholding as well.
Yeah, this is definitely a more complex situation, and we do at this stage not maybe have a clear answer to this. But if you recall the slide with when the obligation to withhold taxes arise, there are two factors. One is that it should be a payment for work, and the other one is that it should be services carried out in Sweden. And in this case, the Swedish company has hired the foreign company, the global function that is abroad, to deliver services. And I would say that the main, would need to go back to see if there is a service agreement. Normally, there are some kind of service agreements in place in these kind of structures. And in that service agreement, there is normally some kind of description. Okay, these are the services that are actually will be provided by the foreign company, and also some kind of description that connects to the transfer pricing policy, and maybe how on what basis the invoicing will be done. Because you need to identify, see, has the Swedish company hired the foreign company to provide services, and also will these services actually be provided in Sweden. And in this case, the main part of these services are actually carried out from abroad within this global function, within the global mobility function. But in the roles that these employees have, they will occasionally go to Sweden. So it's not easy to determine, but if the employees are actually hired to support Swedish function, that they go to Sweden to regularly meet the HR persons in Sweden, and to maybe lead the HR work in Sweden, and to guide and control, then I would say yes, there is a risk that also this invoice would be subject to the withholding tax. But if the employees that are going to Sweden would be more of going on informal meetings, education, or something else that is not really in scope of the services that they have agreed to provide, then the Swedish workdays could be possibly be exempt from the withholding obligation. But this is just more of an example to illustrate how difficult it could be to determine if there is an obligation or not, and this is something that the legislator has not really considered, unfortunately. So to sum up, when it comes to the withholding obligation, there are some aspects. And if you are a foreign service provider being present in the Swedish market, I think the first step would be to identify, okay, what kind of, or which customers do you have in Sweden, and how many, and what activities are you actually carrying out in Sweden, and thereby to identify, okay, do we have to register for F-tax? Or should we go the other alternative and see if there is a possibility to actually get this exemption on the decision on relief from withholding? But the main purpose with the tax agency and also the legislature is actually that foreign companies should register for F-tax in Sweden. And before doing that, you must also make an analysis then on what kind of activities that you carry out in Sweden, being aware of that you will also be expected to file a preliminary income tax return and describe if you are taxable or not in Sweden. But this legislation is also very relevant for Swedish contractors, for Swedish companies hiring foreign companies, because they must make an evaluation of what kind of foreign service providers do we have and what services are they actually carrying out in Sweden, or are we just buying products from them? And you will, if you're an Estonian company, you will having Swedish customers, you will probably receive some communication or instructions from Swedish customers on new procedures and what they would like you to actually have in place before they are paying the invoices. So let's have a look at the last obligation. This is the special annual filing obligation, and this is a new reporting obligations for foreign companies. So if they fulfill one of the three criteria to the left there, if a foreign company is registered for F-tax or are registered for payroll purposes, or is obliged to have a digital personal ledger, which is in Swedish is elektronisk personalliggare, on a construction site, then you will have this annual filing obligation, and this is in sort of a light version of a corporate income tax return, and the information that should be provided on an annual basis and on the same filing dates as an ordinary income tax return is information that basically should be sufficient for the tax authorities to determine if the activities that you have carried out are taxable in Sweden under the legislation of permanent establishment. So this is also something that you have to be aware of when registering for F-tax, that you will have an annual reporting obligation with the Swedish tax authorities. And to sum up then, if we go to next slide, there you will. The first step is to take all of these changes into consideration and identify which one of these changes will have an impact on your business. And as the changes actually could have a cross-functional impact, meaning that maybe HR and global mobility functions are mostly interested in the two first changes, which takes effect on the economic employer changes. I guess that tax functions or maybe CFO or compliance functions are more interested in the two last points, which introduces new registration requirements. But at the same time, I guess that if you have a project manager or if you're up for proposal or bids in Sweden, you must also take all of these changes into consideration when making a proposal and doing the budget, because there will be some increased administrative burden here. And when it comes to deliverables, for example, you will on payroll, that's possible, right? To actually handle from abroad, or at least with some existence or assistance with, for example, from Deloitte.
Yes, of course. You can do almost, or you can do all of the payroll from abroad. It requires more administrative heavy burden, since you will have to file everything on paper. Otherwise, Deloitte will be able to file electronically on behalf of the employer. So depending on how a client wishes to do a setup, Deloitte will be able to help in a full service or just a portion of the service regarding the payroll and reporting and withholding, including calculation.
So I think that's our presentation, that we open up for questions now.
Thank you, Joel and Motto, very much for this very good presentation on a bit complicated topic. I don't know if we have any questions, but while we wait for a question, just to sum it up, so what would your advice be to, let's say, a construction company? What should be the first 3 steps that they should take? Just to sum it up.
Yeah.
Before we...
I think it's a lot of about identifying. The first step is to identify, okay, will our workers be affected by the days thresholds, and do we need to make this economic employer assessment? The second step is identifying the services that are actually provided in service in Sweden. Will these fall under the new withholding obligation? And the third step is basically making an action plan. Okay, what do we need to do now for the different changes? So should we, for example, adapt our business so that our construction workers follow the 15-45 days threshold? Would that at all be possible? Because then we have a problem less. If not, then you have to make some measures in terms of payroll obligations or whatever that might need to be done. And also in terms of the tax withholding between companies and on invoices, you would also need to make take some measures there. And probably, if possible, the easiest way to conduct business in Sweden going forward would be to register for F-tax, because then the Swedish buyers of the services would feel more certain on what they need, and it would basically be easier for them to have engaged Estonian companies.
Thank you. Actually, we have one question here. So how will foreign companies send reports to tax department if the accountant has no Swedish bank ID? How could that be done?
Yeah, so this is a little what I said when I said it will be more a heavy administrative burden. With a Swedish bank ID, you can do everything online on the Swedish Tax Agency's website. However, there are also actual physical payee reports that you can send in physically to the Swedish Tax Agency. However, this is much more administrative heavy, and also if you have 10 to 15 employees that are working in Sweden, you will have to file 10 to 15 individual employee reports as well as a main report to the Swedish Tax Agency, and send in that to their postal address, and also in time, because there are certain time limits.
Mm-hmm. All right, and we have another question. Please discuss a situation hardware plus software system provider. How the components are installed and maintained in Sweden, central cloud, and division done from Estonia. Can you see the question as well?
Yes, I can. Please discuss the situation. Hardware, software system providers. Some hardware components are installed and maintained in Sweden, central cloud, and yeah. This is example of a situation where it is very difficult to actually apply the new withholding tax, the 30% withholding tax obligation on. What we know is that it is the purchaser's perspective that should apply. So if the purchaser, the Swedish company, considers this as a purchase of a product, then it would fall outside of the withholding obligation. So, for example, if a delivery of a goods, for example, that's not a service. So when you purchase the hardware components, if you say that we have purchased our hardware components, and that of course includes an installment, if all of that is one purchase, I would say it could be argued that it could be falling outside of the withholding obligation, because even though there is a small element of installment that is carried out in Sweden, the main thing is actually buying a product rather than buying the work hours. So in those cases, I would say that part could probably be exempted. We do not have any clear guidance on that, but that is how the rules are more or less intended to be carried out. But then if you have also a service agreement on that, which means that there is a maintenance to be carried out in Sweden, then that portion would probably fall under the withholding obligation. And how should you then know what is what? We have very little guidance and very few examples on what is how we should reason in these cases. But the tax agency has some example of, if you, for example, hire if you as a private person hire construction work in Sweden to actually renovate your home, that would include both work hours and some material costs, paintings, and so on. And what the tax agency says that you could exempt the costs or invoicing for materials, which is to be compared with the hardware here, if it is clearly specified on the invoice. So in this case, in this example or question, my advice would be to have a clear specification on the invoice on what is actually carried out in Sweden, what is not carried out in Sweden, what is a hardware, what is not, and what is a service and what is not, to actually exempt a greater portion from the withholding obligation.
All right. Thank you for the answer. See if there are any more questions. Okay, we have maybe one question coming in a bit. Not sure. But your contacts are available to the student companies, of course, and you also all receive, of course, the presentation from Joel and Marta. So I will encourage you to contact Deloitte if you have any questions or you want to specify something. I don't think we have any more questions.
Yes, we received one here. How long will it usually take to process an tax obligation? It will take a couple of weeks if all documentation is in place. Our experience is now that, however, in case the tax authorities raise questions, it could take several weeks. It could take 4 to 5 to 6 weeks, and normally that would be the case. For example, if the certificates that are provided from the home tax authorities are not sufficient, and so on. So it will more be about formal requirements not being met. The tax agency has quite good information on their homepage in English on what is actually needed to be provided. So it's www.skatteverket.se.
All right, thank you for your answer on this question also. Let's see if we have any more. Not at the moment. All right, but then I would like to thank you both for a very good presentation. And as I said, we will forward the Deloitte's presentation to all the companies. Yes, so thank you everyone participating at this webinar. Thank you and have a nice day.